All right, welcome, ladies and gentlemen. All right, welcome. All right, now, welcome to our first session. This is our first session of what we call the new directive portfolio. So, I promised all of you, all right, that we are going to start building a portfolio for cash with a new ambition, with a new goal, right, moving forward into the next 52 weeks. All right, and today is the first session or the first week that we're going to start adding trades into this new portfolio. Right now, so as you see on my screen right now, we have a blank position sheet. Right now, everything's going to start with a clean slate today, and this portfolio is assigned with $100,000 in cash. Right now, so I will be building this portfolio live, right, on as many Fridays as possible together with all of you. Right, so you can witness, you can see the growth of this portfolio. We will laugh, we will cry together, right, for missing targets, for hitting targets, but this is all going to be real. Right now, why real? Because you will verify my trades, which will go into the accounts, right? Okay, and we will do it week by week. All right, now, so without further ado, let me get this session started. All right, and I will refresh your memory of what I intend to do, all right, and what my targets are. Right now, so once again, all right, before I start the session, a disclaimer always has to be put out. Right, all forms of investment, all forms of trading always bears a risk of loss. So every investor will have to be very aware, right, of the risk that they're taking, right, and also the risk involved in any strategy or trading type. Right now, you need to be sure of this before you actually follow or go into any trades, which I will be talking about. Right, and also please, right, treat whatever that I'm telling you today in this live session, right, as a form of sharing, right, and by no means is any form of recommendations at all. Yeah, all right. These are just my personal opinions based on my experience on the stock market for more than a decade. Right, I will share with you what I think, how I see, right, what kind of trades I'm going to add into my own live portfolios. Right now, so for the rest, right, you need to make your own judgment call. Okay, now, so with that out of the way, all right, now because this is a brand new session as well, right, if you are joining us for the very first time, right, because you're invited by friends or because you came because you saw a shared post by one of your Facebook friends, right, welcome to the session. Right, if you're joining us for the first time, you can see a link inside the banner right now. So go to streamyard.com/Facebook. Right, you will be brought to a pop-up page. Right, and inside that page, you will see a Facebook button. Right, you just need to click on the button. Right, and this will this will tell Facebook to approve your profile, right, to be accessed by this software that we're using for Facebook Live called StreamYard. Yeah, okay, so when you start to leave comments during the session live, right, okay, we will actually be able to see who's leaving the comments and your profile as well, right? So I can address to you personally, right? Hi, Jimmy. All right, hi, Jimmy. Hi, Andy. All right, now, so all the positions have been liquidated, Andy. All right, so you can choose to hold on to those positions, right? Or, okay, you can close them like what I did for the previous portfolio, right? So I would have closed them based on last week's, all right, market closing prices. Yeah, okay, because most trades over here that we held, right, would have expired last week, right? So as of last Friday, right, I did say that the entire portfolio will be liquidated. Yeah, okay, so today we're starting with a clean slate, right, and a clean fresh sheet. Yeah, okay, all right, now, so with that out of the way, all right, we won't run the session any different, which means we have to know what the general market is looking like first, right? So we will go through the general market, right, which is what I call the big picture, right? And once I form my opinion of what I call the big picture, right, then I will narrow down, right, to individual stocks, right? Because ultimately, this Friday's portfolio, right, is now targeted at achieving double-digit returns. But at the same time, right, I'm also going to set a target of achieving $2,000 in cash flow, right, from a month-to-month basis, right? Yes, this is going to add pressure on me, right, but I'm feeling comfortable about it. Yeah, all right, and I think we should be able to achieve it, right, as we go along. Right, so markets will be tricky, markets will be difficult. There will be earnings season, which makes things a little bit more tricky, like what we are right now, right? But if you look hard enough and if you know what you're doing, right, there should always be good enough trades, right, for you to achieve your goals. Yeah. Okay. Now, so I want to show you that, right, in a very live market environment, so there's no manipulation. Right, I have to take it as it comes. Right, and right, I will make it in a form whereby all actions, right, will be taken when I'm live together with you. Yeah, okay, so I will not add positions midweek because this portfolio is not meant to be active. All right, so I will only take actions on every Friday, right, when I'm running the session live together with you. Yeah, okay, so this is going to show you that it's, pretty hands-off, right? It's not something that you have to pay attention a lot to, right, to be able to generate and build a portfolio like that. Yeah, okay, now, but having said that as well, right, I'm only going to cover one direction, right, or one investment concept during this public Facebook Live session. Right, I'm only going to be targeted at selling portfolio puts, right? But we're going to make a twist on this, right? Because, right, normally, right, portfolio puts, or what we call cash secure puts, right? Okay, now the entire amount, right, to put up for the stock, right, if you need to buy them, right, it's actually there, right? But on this portfolio, to achieve the goal of hitting $2,000 a month, right, we are actually going to take a little bit of leverage over here. All right, now it's not life-threatening leverage, yeah, okay, but it's just a little bit of leverage to give me that little bit of boost, right? Such that even when market collapses, yeah, all right, I will still not face a margin call. Yeah, okay, that's what I mean by leverage. Now, of course, some of you who are new, you will be confused and you will be asking, Terence, how's that even possible? It's actually quite simple, right? Because if you choose the right stocks, which I've always emphasized over and over again, right? If your stock choices, right, are fundamental based and they are safe and they are what I classify as the right stocks, right, even amidst a market crash, right, the benefit of this portfolio is number one, right, not all stocks will crash along with the markets, right, and number two, most of these stocks, when I choose to enter a trade, right, they are already severely undervalued by the market, right. Number three, the reason why they're undervalued is because, right, for certain reasons, right, they are not being loved by the market right now, hence the depressed prices. And number four, right, if there are depressed prices, it also means, right, that the big traders or the people with big funds are not owning these counters, right? They have been selling out on it, right? That's why prices have been dropping, right? Okay, number five, but their business is still running as per normal, right? Profitability of the business is there. Yeah, right. The only thing not to like about it, right, is really down to the stock price. So if the market doesn't love the stock price, right, it just means that we will not expect a very sharp rise. Yeah, okay, but it also means that if everyone has sold out of the stock, right, we should not be expecting a very, very steep, right, sell-off as well. Yeah, okay, so these are the stocks that we will target, right, to build, right, our portfolio of cash. Right now, why do I choose to do it this way? There is an idea behind it. Right, I've been doing something like that, or I've been an option seller for more than a decade. Right, so you may see on social medias out there, right, that it's so easy to build a $5,000, $6,000 portfolio, right? But many of these people are going out there and building their portfolio or selling put options, right, on your high-profile stocks like Tesla, on your high-profile funds out there like ARC Technologies, right? You should never, ever, ever do something like that. Yeah, okay, all right. Now, so take my 2 cents worth, all right? Maybe it's half a cent worth to you, right? Okay, but that's what I'll tell you. Never ever do something like that. Why? Right? Because, right, if you have all witnessed what has happened to Netflix recently, right? What happened to Netflix, right, can and will happen to any growth stocks, right? I can only tell you that, right? It can and it will happen to any growth stocks. Why? Because even the great Microsoft has never escaped, right, this market neutralization. Right now, why do I call it a market neutralization? Very simple. Because when a company first starts, right, there is a period of what we call the super growth. Right now, and when they can prove their capability, right, and achieve super growth, right, the stock valuation will mimic it. Yeah, right. So people will give them the super growth valuation. But you must understand, right? If a company starts, right, they literally have 0% of the entire market share, right? But if they are capable, they will soon start taking up 10, 20, 30, 40, 40, 50% of the market share that they're operating in, right? And that's the super growth period. But once they start hitting half of the entire market sector, yeah, all right, or half, all right, of the entire market for their business profile, right, things will start to slow down. Yeah, okay, and the market never ever likes growth companies that are starting to show that they're slowing down. All right, now, so they have been shot through the sky, right, through the sky. All right, many of you have seen valuations like that, they're through the sky, right? But if they start looking like they become human again, right, they will fall from the sky all the way down to earth. So is that really something that you want to be inside of? Right? Why? Because you don't know when that's going to happen. Yeah, so you're always going to have a portfolio, right, that's capable of shooting you a heart attack at any point of time. Yeah, okay, that's not my style. All right, all I'm saying is this: you can do it, you may do very well in it. Yeah, all right, but that's not my style. Yeah, okay, so my style and my choice of building this portfolio, right, okay, is really what I want to achieve, right, which is the $2,000 income, right. And today, yeah, all right, we're gonna start with a clean slate. Yeah, okay, so everything is gonna be new over here. All right, okay, now, so without further ado, let's go ahead over here. All right, so Yao, right, like I said, if you're following our trades on Friday, last Friday, I would have liquidated all trades, all positions. Yeah, okay, Yao, I'm not sure if you're one of our members over here, but if you are, yeah, okay, then we will discuss it during our live trading sessions. Yeah, okay, this is a public session, right? So I will only be discussing, right, any trades that I'll be putting up today, which are all brand new. Yeah, okay, which are all brand new. Yeah, okay, right now. So without further ado, let's go, let's go. Right, first let me remove the banner. Right, and I'm pretty excited. Right, there's a little bit of pressure, but I'm actually excited. Right, because it's challenging me. Right, it's going to put me through the test. Right, under the public eye. Right, for the next 52 weeks. All right, now, so let's go. Right now, so this is the market, and this is how the market looks like. So what you see on my screen right now is the S&P 500. Right, and this is actually the index. Right, which is represented by SPX. Yeah, now, so if you look at what SPX has done, right, since January up until now, right, you can really say, right, that it's still pretty much, right, kind of in a zonal challenge, right, which means it's up, it's down, but it's literally nowhere, right? And if we start to narrow to something shorter term, as you can see my channel over here, right, we are kind of trading in what we call a downward channel, right? And a downward channel is still predominantly a little bit bearish. Right, so you can see, right, every time it hits the top, right, it starts to come down, right, and once it hits the bottom, it bounces back to the top, right, like over here, it threatened to break, it failed, and now we are all the way back to the bottom again. So the key is this: we are now sitting at the bottom, right, of this downward channel line, right. So two things can happen: we will see the bounce back up, right, okay, or if we see a clean break, right, of this support channel, right, we can actually see more downside on the market. Right, so Terence, if it breaks this downward channel support, right, where is the next potential stop? Right, the next potential stop is actually this point over here, right, which is 4,150. Right, so right now we're sitting at about 4,350. Right, so if it breaks this support level, right, the market can fall another 200 points very, very quickly. Yeah, okay, it can fall another 200 points very, very quickly. Right now, so that's how the market looks like over here, right? But from a bigger time frame, let's take a medium-term time frame, right? It is really trading inside this box. Now, okay, now I call it a box because, right, if I take a box drawing tool, right, you can actually see that most of the last 2 to 3 months price movement of the S&P 500, right, have been inside this gray area. So in a shorter term, we are like in a downward channel. Yeah, okay. Or we can call it a little bit like a flag as well. Yeah, okay. But on a longer term, right, we have a sideways channel. Yeah, okay. We still have a sideways channel. Yeah, okay. So that's how I see the market, right? There may be some downside. Yeah, okay. But we are also in the middle, right? Okay. If you look at it very clearly in this box, we are in the middle, right, of this entire channel. Okay. If you're in the middle of this entire channel, right, okay, it may continue to fall. But the middle ground is also usually a place that allows stocks to hit a support level and bounce as well. That's like what we call a 50% retracement, right? Yeah, okay, so that's also a possibility. Now, so with this objective in mind, right, let's go ahead, right, and start adding the trades that I prepared for this brand new portfolio. Yeah, okay, now, so without further ado, the first trade that I want to add into this brand new portfolio today, right, is, right, a severely undervalued stock, right, and that's WBA. Right now, so we have been eyeing WBA for a while now, right? The last time it missed the earnings, right, there was a gap, right, and it caused the stock to start sharply trading down to a low of about 42.90. Let's make it 43, right? But as you can see, since then, right, from $43, the stock has steadily rebounded, right, and going all the way to about 45.60, which we see today. Right, but I really believe, right, that if we can challenge this resistance level, right, which is about $46, And if it breaks it, right, this time, if it breaks it, right, we have actually a lot of potential upside in store for us, right? Now, what's the next thing over here, right? The next thing, right? This company is trading at a fundamental of 6 times, right, its earnings. That means the stock price today is only 6 times larger than how much this company makes on a year-to-year basis. And this company is not new. This company is literally what we call like, a staple. Why is it a staple? Because it runs pharmacy outlets. Yeah, that's all they do. All right. And pharmacy outlets, right, are actually very, very profitable business. Yeah, okay, whether you like it or not, they make money. Right. This company also pays a dividend. As you can see, the dividend is not small. Right. The dividend works out to about 4% dividend return. So if you buy the stock right now, okay, rather than sell the options, if you buy the stock, you are actually capable of making 4% return on just receiving dividends alone. Right? Okay, and also the potential of any upside, right, if the stock price goes up. Right? But again, right, like I said, right, the reason why the chart actually looks like that is because, right, somehow, right, the funds do not like what they see in this company. Right? But it also means if the stock has fallen from 55 all the way down to 45, it also tells you that the stock has fallen by about 17%. Right? And what's the best part? The best part is this. If we just look at the last quarter, right, can you actually see, right, that the company has an actual release earnings that was better than estimate? Right? So the company is actually outperforming what is estimated from them. Right? So a company that's outperforming, but yet the stock price is cheap and it's falling. Right? Now, why? Because many of the unit trust managers, many of the fund managers out there, right, will never buy, right, a good company if the chart looks ugly. Yes, they will never do that. Why? For a very simple reason. If they buy something like that, right, can you imagine if you're the client, right, and you look at a company and you see a chart looking like that, what will you do? You have questions mark, right? Right? Why? Because it doesn't look pretty, right? You'll be questioning why the heck is he buying this stock? Yeah, okay. And where do you find the answer? You're probably going to try to ask the fund manager itself for answers, right? And if one customer asks a question, right, and he has to answer it, right, that's one time, right? But a fund typically has a few 100,000 investors. So if everybody calls to ask, can you imagine how much hassle they have to deal with, which is a big headache to them? But why do they really take on this job? Not to entertain customers, but they take on this job for all the big fat bonus, which seems so easy to them, correct? So they don't like to take any investments which requires a lot of justification from their end, right? That's why they always pick the pretty charts. Yeah, so this company, all right, okay, is not gonna get any love of the big money until the chart starts looking prettier, right? And when that happens, it is already too late to get in. Right? And that's really why buying undervalued stocks, which are profitable, actually works, right? Because of what I've just explained to you, right? They went from ugly to pretty. Yeah, okay, so while they're still ugly, nobody likes them, nobody sees them, right? But once they start to get prettier, right, they get all the attention, right, which is not needed actually, right? Okay, and that will cause the stock price to go up, right? So because of this, right, I'm actually going to take advantage, right, and sell my first put option, right, for this new portfolio, right? So I'm going to go there, right, and the whole aim is to do this monthly now, right, because I have a targeted income, right, to achieve of about $2,000 a month. Right, so I'm going to go to May 20th, right, which makes this trade about 28 days. So that's about 1 month from now, right? So I'm going to go ahead and sell the $45 put option, okay? All right, now why $45? Because $45, right, I do feel is a pretty strong level, right? Right now it's trading amongst this range, right? And 45 is like right in the middle of that range. And I do believe the stock is capable of holding it. Yeah, okay, so for that, right, I'm actually going to add the first trade, all right, for the $45 put option, right, on WBA. Now, hang on for a minute, right? I will be telling you, all right, how do I choose my sizes, right, and how do I account for it? Yeah, all right. Now, so if all of you join me the session 2 weeks before, right, today, right, I did spend a little bit of time, right, telling all of you, right, how I intend to build this portfolio. All right, so let me just place the order and get it in. All right, there we go. We're done. Yeah, okay. All right, now. So I'm filled on this trade over here, and let me show you what we did right now. Everybody, I just sold 5, right? I just sold 5 of the WBA May 20th, $45 put option. Yeah, so as you can see, this is a trade tab. So at about 51 minutes on this hour, yeah, okay, I just moved to the right, and you can see this is exactly the platform clock, right? It is 1 hour different from us. Yeah, okay, all right. Now I don't know why, okay, because of the time zone, maybe it's a Hong Kong time zone or something like that, right? It's 1 hour time difference. Right? I'm not bothered to change it, right? So I just want to show you that I actually sold 5 options, right, at a premium of $1.26. Okay, now, so how is this going to pay me? Right now, so what it's going to do over here, right? It's going to do this, right? Give me a minute. Yeah, okay, I'm just going to, I prepared the trade in advance. Yeah, okay, so I'm just going to cut and copy over. Right, there we go. Yeah, okay, now, so the first trade over here, right, it's going to be selling 5 options, right, of the WBA portfolio puts for 20th of May, right, at a strike price of $45. Now, the entry date is today. Yeah, okay, and I've done it. Okay, I've done it for more than $1. Right, how much did I do it for? Right, I did it for $1.26. Right, there we go. Now, so just this one trade alone has already loaded up $630 in cash flow, right, for this month. Can you see now? Right, of course, if I close the trade early, I will make less than the $600, right? But I'm more than capable of just letting this option go all the way to expiry, right? And I can have a shot at making this $600, and that's not too bad. Yeah, now, but how much capital am I actually deploying, right, or setting aside for this trade? Right now, I'm actually setting aside, right, an investment amount of about $15,750. So you'll be asking, Terence, how do you work out this amount? Yeah, because, right, you sold 5 put options. So if I buy $45, right, and I buy 500 shares, right, at $45, that's not the amount, right? You're probably saying 45 times 500 shares, right? That's about $22,500, Terence. So why did you set aside 15,750? Simple, right? I said I was going to take a little bit of leverage, right? So how much leverage did I take? Right? I took about 30% leverage. So I've reserved about 70% of the total cost to buy the share if needed. Look very carefully, if needed, right? So if it stays a put option, right, it doesn't matter anyway, right? So this allocation only matters, right, if I have to own the stock. Yeah. Okay. All right. Now I'll tell you why I did it this way. Right. When I finish all the trades for today. Okay. All right. So let me go through all the trades that I've set up first. Now, so for this one over here, right, I'm setting aside 15,750. Right now, so for $100,000 portfolio, this represents about 15.7% exposure. Yeah. So I did say, right, all my exposures will lie between 10% to a maximum of 20%. Yeah, so I will not go over 20% allocation. So right now we're in the middle of that zone. Yeah, okay. All right. Now I do like this company. Right, I have been trading it for a very long time. So I'm clear of the fundamentals and of course the potential of the business. Yeah, okay. So I'm taking a 15% right exposure on my portfolio. Right now. So let's go to the second one. Right now, the second one that I want to add today, right, is right. I wasn't prepared for this at the beginning of today's market, right? But now I actually am, right? Now, so the second stock that I want to get in today, right, is actually GPS, which is Gap, right? Now, so why am I happy to get into Gap stocks? Because many of you will say, but Terence, there's a retail stock, right? Okay, it's a retail stock. Yes, it is. But you must understand the dynamics of what's happening right now, right? So all over the world, what we have, right, is an inflation problem. So whether you like it or not, right? Because, right, even just today, right, when I went to dine in, right, at a restaurant earlier, right, in the afternoon, right, I've noticed that their menu prices have actually gone up. Yeah, okay, that's very clear of inflation happening. Yeah, okay, prices of many things are starting to increase, right? And even so, right, in America itself. So when people are facing inflation issues, right, when things start getting more expensive, right, what do the common people start to do with their lifestyle? Right, they start downsizing their expenses. Right, so what's Gap? Right, Gap is pretty much like Giordano, right, for us in Asia, if you can get what I mean. Or it's pretty much more like Uniqlo, right, okay, in our context over here, right, if you can get the reference, right? Do they sell a lot of, apparel? They do, right? Do they actually make profits? They do. Yeah, okay, but, right, they are more for the masses and they are more for the common people, right? But it is at this moment, right, where actually Gap, right, is going to benefit, yeah, right, from those increased sales, right? Now, so I just want to show you, right, now, this PE ratio is actually a little bit inaccurate, right? So like most platforms over here, right, inaccuracy does happen, right? Now, if you ask me, Terence, how do you know, right? You can actually do a manual calculation, right? Now, so if I change my screen over here, right, it will show you the last 4 earnings, right, of the stock. So all you need to do is to add up whatever you see, right? Now, so I'll do it for you. The first one is 0.48. So that's 48 cents, right? And then you add 70 cents, which is the second quarter, right? Now, the third quarter shows you 27 cents. Okay, and the final one is a loss of about 4 cents, right? So if you add all of these numbers up, right, I'll do it as well, right? 0.48 plus 0.7 plus 0.27 and then minus 4 cents. Okay, that's an earnings or EPS number of $1.40 or $1.41, right? To be accurate. So this company made $1.41 in the last year. Yeah, right, in the last year. And where's the stock price right now? Look, it's only $11.75 today. So price to earnings ratio, which is what PE ratio is, means I will take $11.80. I'm just going to put $11.80. And I will divide it by the earnings, which is 141. And this tells me that a company is trading at an 8 PE. Right? It's 8 times earnings. Right? So many people or many students, right, who have heard me speak before, I've always used this as a reference. Right? If you can buy a great property, right, sitting on a decent to a good location, yeah, okay, and if the rent, right, that you make it's going to help you to pay off for the entire property in 10 years or less, will you deem it as a good investment? Right? And you know, right, it's definitely yes. And that's equivalent to what we're talking about. Why? Because a decent, right, to a good location, right, simply means, right, a decent and a profiting company. Can you see what I mean? Right? This company is making money. Yeah, okay. And the second one, right, is, right, at 8 times PE. Right? The company is going to make profits that will pay off for this stock price today, right, in 8 years or less. That's what it's representing. So it's a good value over here. Yeah, okay, all right. Now, so the only thing that you might be a little bit concerned about is that there is upcoming earnings on the 26th of May. But that's after the option expiry, because I'm looking for the next month. So this option is going to expire on the 20th of May, just like the one that we entered earlier. So can you see now? All right, now, so I'm going to get in on a trade selling a put option. All right, okay, now, so the trade I'm looking at is again 20th of May. Right, and I'm actually going to gun for the $11 put option. Yeah, right, I'm going to gun for the $11 put option. All right, hang on, give me a minute. Okay, now, so for this one, let me go ahead and do it. How much should I go for? There you go. All right, now, so I'm done. Yeah, okay, now, so my portfolio has added 10 put options of GPS or Gap Store's $11 put option. Yeah, now, so all my trades are going to have the same expiry today, right? And that's going to be 20th of May. All right, now, so I've just added 10 options, right, at 56 cents. Yeah, okay, right now. So this one is easier to calculate. We just added another $560 in cash flow, right? Because I just did 1,000 shares. Yeah, okay, now, so I'm going to add this as well. All right, now, so this is the second trade we added, all right, and that's gap stalls over here. All right, now I did the $11 put option, all right, for the 20th of May, all right, and I just did, all right, 10 put options. Yeah, okay, and it's not 50, it's not 62, but I did it for 56 cents. So this is going to help me get $560 in cash flow over the next 1 month. Now, how much capital I'm tying up? All right, I'm also setting aside, all right, about 70%. Yeah, okay, about 70%. Right, so this trade only takes up $7,700. Right, that's all it took up, $7,700. Yeah, okay. Now some of you will say, Terence, right, why don't you go up to 10%? Yeah, okay. Now the stock is a little bit cheap. Yeah, okay. I don't really want to have a 10% exposure on such a cheap stock, right? Because the quantity I'm trading will be a little bit large. Yeah, okay. I just want to keep it aside, all right, for potentially diversifying my portfolio further. Why? Because what's my goal, everybody? Right? Can you leave a comment and tell me what's my goal for this portfolio? Yeah, all right, Facebook user. Right? Unfortunately, I don't know who I'm speaking to. Right? Can you go to streamyard.com, right, and /Facebook, right, and just approve it so we can know who's leaving comment. Yeah, okay. I know it's gap down, but this portfolio is not built from a trading perspective. This portfolio is built from an investment perspective. So all my trades come from, right, a fundamental based look first. Yeah, okay. It always starts from the fundamentals. Yeah, okay, which I just justified just now. Yeah, okay. Andy, congratulations. Yeah, okay. All right, now. So yes, Alex, thank you very much. So Alex highlighted that my goal, right, together with Florence over here, right, is to achieve a $2,000 income. Right. And where am I sitting right now after just 2 trades, everybody? I'm halfway there. Right, I'm halfway there. Yeah. All right. And how much capital have I used for my $100,000 portfolio? Right. I'm like what? 20% exposed, 22% exposed. Right. So it can be done. Right. If you know where to look. That's what I'm trying to say. Yeah. Okay. We're halfway there. I'm not done yet. Yeah. Okay. Because I've still got stocks that I'm looking to add. Yeah. Right now. So what's the next stock I'm going to add to this portfolio? All right. Ready or not, ladies and gentlemen. Right. Because the next stock I'm going to add, right, it's probably going to surprise you as well. Yeah. Okay. It's VZ. Right now, to be honest, today is probably not the best day, right, to get into a trade. But since, like I said, the whole objective, right, is an investment. Yeah, okay. I'm looking at a company from an investment standpoint. Right. So yes, today is a gap down. Right. Why? Because the earnings came out today. Right now. So the earnings was probably something that they didn't like, but right, they didn't not perform. Look, the estimate was 134. Right, and they announced a 135, so they are in line, right? And Verizon is a telco company, right? So telco companies are what we call the safety net, right, during difficult market times. So it kind of justifies, right, from this outlook, right? Plus, right, I do have a very strong support price level over here at about $50, which is not too far away, right? So that's another plus point over here. Right now, next, right, this company, as you can see, from a fundamental standpoint, where I'm getting consistent now, right, trades at about 9 times earnings, right, still falls within the undervalued criteria, right? So I'm more than happy, right, to add a put option position, right, and more so since, right, the earnings is already out of the way, right, which means in the next 1 month, as I continue to hold this put option, right, I no longer have to worry, right, about the earnings outcome anymore. Yeah, okay, now, so let me have a look, right, if I'm going to take the 50 over here. All right, so yes, let's do it. Okay, how much I'm going to grab for this? All right, there we go. Right, I just grabbed 50 cents over here, right, selling, right, the Verizon May 20th $50 put option, right, I sold 5, right, why? Because if you compare the WBA to Verizon, right, both strike prices are very close, so you can see that the capital outlay are going to be very, very similar amounts. Yeah, okay, so that's kind of like, right, the maximum exposure I can go? Because I'm sure some of you will be asking, yeah, all right, I'm sure some of you will be asking, oh my God, Terence, right, how do you decide how many? Oh, thank you. All right, I apologize for that. All right, let me take, oh man. Okay, this is what I'll do. Yeah, we're done. Thank you very much. Okay, right now. So as you can see over here, Verizon is sold 5 over here for 50 cents, right? And from a portfolio perspective, yeah, give me a minute. Right, trade number 3 by selling 5 Verizon Wireless, 20 of May, $50 puts for 50 cents. Now, okay, I just created another $250. Now, okay, now, so that's going to bring my total cash flow at this moment to $1,440. Right, I'm almost there. Right, I'm almost there. Right now, and for this trade, I have to set aside $17,500. So that's almost a 17.5% exposure. Yeah. Okay. Now, so I've added 3 trades so far. Right. Okay. And my total exposure at this moment on my portfolio funds. Give me a minute. Right. Sitting at about 41%. So I'm pretty comfortable. Yeah. All right. Okay. So I'm sitting at about 41% exposed. Right. But I'm actually going to add one last trade to my portfolio. Right. And this last trade over here, right, I'm doing it with a little bit of risk, but right, purely because I'm comfortable with what I'm seeing. Yeah. All right. So without further ado, let's go on the last trade over here. All right. The last trade I'm going to add today, right, is I'm going back in on Pfizer. All right. So I'm going back in on Pfizer. Why? Because just from the pill alone for the COVID, cure, right? Plus, of course, the vaccination itself, right, has promised that Pfizer is going to continue making a big stream of profits, right? But the thing with Pfizer is this: they're not a one-drug company. They're not Moderna. Yeah, they're not, right? They have an entire arsenal, right, of pharmaceutical medicine, right, in their whole range of products. So apart from COVID medicine, apart from COVID vaccine, right, there are actually a lot more profitability behind the company, right? So the whole COVID, cure, right, is like an injected boost for the company's profitability, right? So the company kind of like just had a growth, right, revenue stream to their entire business. And yet the company is trading at a 12 PE, right? So that to me is a little bit of undervaluation over here. Right now, plus the last time we got in on this trade was somewhere around here. Right now, and that price level, let me just draw a price level line. Right, it's about $45. Right, that price level is $45, and we're not too far again. Right, because the last time we got in, we actually got out at a peak over here. Right, and now the stock has come back down. So that gives us a good opportunity, right, to go for another round. All right, now, so over here, right, the stock is sitting at about 48. Right, so I'm going to look for the $45 put option. Right, that's what I'm looking for. All right, now let me just see how much I can get for it. All right, so for the 20th of May, $45 put option. All right, okay, now this is the bid and ask. All right, I've just got it. Yeah, okay, now they took my order over here and I just sold. Ooh. There we go. All right, now I just sold 5 put options on Pfizer May 20th, $45 puts at 87 cents. Yeah, okay, all right, now, so our 4 trades that I've planned out today, all right, it's all done. Ladies and gentlemen, we're done. Yeah, now, so over here, all right, let me show you the portfolio that I prepared. So these were the 4 trades that I prepared over here. All right, let me adjust the values. All right, so it's 1.26, right, with 56 cents, right? And then 50 cents, right? And finally 87 cents. Now, okay, the strike price is a little varied. This is 11, this is 50, 11, 45, 45. Yes, I'm right. Now, so can you see we are already almost there, ladies and gentlemen? All right, I've pocketed $1,875 in cash flow. Yeah, okay, now, how much am I keeping aside? 15,750. All right, exactly the same as WBA because the strike prices are the same. Yeah, now, so I'm utilizing about 56% of my portfolio cash. So I still have another 40% left, right? Which gives us more avenue and more room to continue selling more next Friday. Yeah, okay, so maybe for our first month, we will overshoot our target. Who knows? All right, now, but let's see, okay? All right, so for today, we are already almost nearly there. Yeah, okay, I'm at 1,875. Yeah, now, so I'm about am I 48% exposed? No, we're 100,000 now. But I'm 57% exposed today. All right, now, so if all these trades work out, if all these put options expire on the 20th of May, right, without any claims, right, I would have generated $1,875, right, on a portfolio that is worth $100,000. So if you think about it, right, if you think about it, this will represent, right, a 1.87%, all right, 1.87% return. Now, so if we are capable of making this every single month, it would tell us that in the next 1 year, right, if we can achieve consistency, that we are already hitting a 22% return. Right, a 22% return. That's it. Yeah, okay, now, would you be happy, right, doing trades the way I just did week after week, right, without much intensity and allow you to generate 20% and more, right, on a year-to-year basis, right, on a year-to-year basis? Yeah, okay, if you're happy with those kind of outcomes, right, leave a comment, let me know. Now, I want to know, who are the people who are with me right now, right, they are, happy with these kind of numbers. Yeah, okay, Take in, thank you very much. All right, Take in, thank you very much. All right, now, so you can see simple ways of how it does it. Now, so I just want to use this Friday session, right, to actually show you, right, the capabilities, right, of options on any portfolio. That's really what this session is. Yeah, okay, now, but if you're interested, right, to find out how you can use options in a more dynamic manner, right, that means adding on the trading philosophy. Look, if you have a portfolio just from investments alone, that makes you 20% per annum, right? And if you add on trading skills, right, which is what we cover in our trading mentorship, right, where we trade weekly, right, live together with all our members, right? So if you join us in those sessions and you learn how to do shorter term trades, those profits from there will actually tag on to what you have already seen now, right? So that allows you to outperform, right, the market. Yeah, okay, so that's how we do it, right? We do a fundamental approach base first, right? Then we add on, right, the trading perspective. Yeah, okay, now, so if you're interested to find more or find out more, right, just speak to my admin manager, right, and send an email to us, right? So the email that you should be sending to, right, I'll just put it at the bottom over here. Right, it's scrolling down at the bottom, okay? Right, so just send an email to my crew members, right, or my admin manager, right, and asking about your mentorship programs available, right? He will fill you in after that. Yep, okay, all right, now, so many of you are happy, yeah, all right, so many of you comment that you'll be happy, right, so that's really great. Okay, now, so, I just want to quickly show you over here, all right, what it means, what it means. Now, so EL, right, now, so EL, right, now, I'm not saying you're wrong, right? I'm not saying you're wrong with your objectives, but you must understand, right? How do I build my portfolio, right? I'm building a portfolio, right? Not from a growth perspective, right? So all I'm aiming for, right, is the fact that I don't need the company's stock price to overshoot, right? But with my trades, if you see on the screen right now, I'm selling what? A Verizon Wireless, right? $50 put, right? And where is the stock right now? The stock is trading at 51.50, right? Now, so as long as the stock does not fall below $50 in the next 1 month, my trade is actually safe, right? And on top of that, at this price, right, the dividend that it pays is worth almost 5%, right? How many stocks can you buy out there in the market, right, that actually promises you a dividend return of 5% at this very moment? So can you see its lure? Its lure is not from how the company grows. No, this is not a growth company. Telco companies are not growth companies. Yeah, all right. If you think locally, you think Singtel, you think M1. If you think Malaysia, you think Celcom, you think Maxis. Are they all considered growth companies? They're not. Yeah, okay. In fact, how they make money is just very stable, very boring, right? But what I need to know is as long as it's not capable of crashing, right, that's good enough for me. Yeah, I'm a premium collector. I'm looking for cash flow, right? I'm not looking for capital gains. Yeah, okay, yeah. Yeah, all right now. So I hope that helps you out in terms of your outlook over here. Yeah, all right now. Take in, right? Does T interest me? The answer is no. Why? Because they just divested one arm of their entire business. So I'm not very sure, right? And any stocks, even if I'm familiar, but if it did something recently that requires me to spend time analyzing it, yeah, okay, it's at the back of my mind, right? If you see how I behave over here, yeah, okay, because when it does something new, I would have to spend time, right, to go and find out, right, what's going on, right, before I form a new opinion on it. Yeah, okay, so take it, right, at this moment, right, there may be changes in terms of the valuation, and the only way I'm going to find out, right, is I dig deeper. Yeah, okay, and that's not how I want to build this portfolio over here as well. Yeah, okay, take it. Yeah, all right, I hope it kind of makes sense to you. Yeah, all right, now, so EL, right, actually, it still doesn't matter. Let me tell you why. Because, right, you have to look at the entire investment from a portfolio perspective. What I've done today, right, regardless of how much I'm getting for each stock, right, as an entire portfolio, I'm making about 1.87%, right, over the next 1 month, right? How will you rate that if you can make close to about 2% a month on your portfolio capital? All right, that's why I was asking the question: would any of you be happy? Right. So, what's investment? Yeah. Okay. What's the whole objective of investment? To make more, but more is also very subjective. It's different for everybody. Yeah. Okay. So if you're happy with 2%, you're nearly there. Can you see now? Yeah. Okay. Yeah. Right. Because if you say $250 on a 17,005 is very little, right? But if you keep 17,005 in an American bank, yeah, I remember you're in America. If you keep it right now in an American bank, are you getting paid at least 250 by the bank, right, for the amount? I doubt so, right? Yeah. Okay. Now, so can you see it's still better off? Yeah. Okay. It's still better off, right? Without really a lot of additional risk. Yeah. Okay. All right, now, so Desmond, all right, I can't comment over here, all right, because it is a trade, like I said, on Friday the 14th last week, I would have killed all the positions, not Friday, Thursday. Yeah, okay, I would have killed all positions on the portfolio that I built on Friday. Yeah, okay, so I'm starting on a clean slate, a clean portfolio today. Yeah, okay, so if you're comfortable with the stock, you can continue holding, right, just like what I did, right, on the previous portfolio. You could hold the stock, sell call options, right, until you achieve recovery. That can be done. Yeah, okay, but for me, right, because my portfolio, as you see on the screen, doesn't have that stock at the moment, right? So I can't discuss it. Yeah, okay, I hope you understand from that view, right? I can't discuss it right now. Yeah, okay, so I will leave it to you, right, okay, on how you best manage it, right, and then decide from there. Okay? All right. All right, there we go. Oh, take in. I almost misread what you're saying. All right. Oh, well, not worth your time. All right. There are better ones. Yes. All right. In reference to T, right? Yes. All right. I believe you're talking in reference to AT&T earlier. Right now. So, Siu Yong, all right. You're asking, all right. You're not using ETFs as SPY, right, for this strategy? The answer is yes. All right. Siu Yong, let me ask you a question. Very simply. Many people tell you that a SPY is great, right, for long-term investment, right? But I need to tell you this. Right? Can I say, right, now I need all of your help, okay? Be ready to comment, right? Would all of you say that the SPY or the S&P 500 ETF stock, right, functions like a big built elephant, right, in the market? Is it like a big elephant in the market right now? Okay, not right now, but just the way it's built as a stock. Does it move, right, and walk like a big fat elephant, right, in the entire market? Right? Just type yes or no. All right, thank you very much, EL. Is Facebook working faster in America? Because you're the first one out. Okay, now, so a couple of you are starting to type yes. Thank you very much, Margaret, who's joining me from YouTube. Yeah, okay, all right, and Su Young as well. Now, so you asked the question and you answered as well, all right? It functions like a big fat elephant. Now, so when an elephant stumbles, that means when an elephant falls into a lying position, how long does it take for it to get back up? Right? How long will it take for such an elephant of that stature, right, to actually get back up on his feet? Right? Will you say quickly or slowly? Okay, I'm actually looking for a comment, answer in the comment, okay? All right, so please go ahead and type it. Thank you. Right now, so that's the problem, Su Yong. Right now, the SPY is excellent, right? It's excellent when the market has already crashed, right? But the SPY is actually very bad investments, right? When the entire market is still expensive. Yeah, okay, now, so that's why this is not the time to actually touch such a product, right? There's so much more downside, right? And very little upside. And if you get caught, right, on the down move, right, it's going to take you a very long time, right, for it to recover. Yeah, okay, right now. So I hope you see where I'm standing from a risk standpoint. Yeah, because I said earlier, how am I building this portfolio? Number one, I want profitable businesses, right? Number two, I want valuations that are very cheap. So just based on this, right? Yes, the SPY is all profitable companies, but valuation-wise, is it considered cheap now? No. Is it really unloved right now? No. Yeah, okay, so that has already failed. Okay, got it? Yeah, I hope that benefited you. Yeah. Okay, now, so next question over here, Yao, how do you lower the cost from 100 to 70%? It's a matter of how you use it. So every broker, right, has a margin account, right? And a typical margin account for selling put options, right, takes up about 20% of the strike price value. That's what they do, right? But that's considered very high leverage. That's like the maximum, right? And if you do that, right, and you start using the entire amount on the leverage feature, you're going to die, right? You're going to be dead. Your career is going to end very soon on Wall Street, right? Because as long as you're assigned, right, you're going to be assigned 5 times more than how much cash you have, right? Okay, now, so that's trouble. Yeah, so by allocating 70% is just me keeping my books. That's all. Yeah, I understand, right? That's why I have this Excel sheet, right? Because I want to know how much of my money have I actually spent. That's why I want to know, right? So I hope you see where I'm coming from over here, right? I want to know how much money have I spent. And as of today, right, I've spent $56,000 on my portfolio, right? EL, is that clear? Yeah, okay, so I believe that I've answered Mike's question, which is below EL as well. Yeah, okay, so it's definitely not going to be enough. So you don't do that. Right, so how do you tell that the SPY is expensive? Tanya, very simple. Right, what has the stock market done in the last 10 years, Tanya? This is like going to be one of the simplest one for me to let you see. Right, so let's go to SPY. If I'm going to drag it out to just 10 years, look, this is the index for the last 10 years. Yeah. Now, if you consider this as a big white elephant, would you say that it is expensive or cheap now, Tanya? Just from what you see on the chart right now. Right? I have no idea who Facebook user is. Okay, I don't care whether it's bull or bear right now. Okay, I'm coming from a fundamental standpoint. Based on what you see on the chart, will you consider what you see, right, as expensive or cheap? Tanya, you got the answer. See now? All right, okay, that's how you know whether it's expensive or cheap. That's like the 101. Yeah. Okay, like the 101 over here. Yeah. Okay. Tanya, cheap and expensive is relative. Yes, I agree. Okay, but what is the S&P? Right, the S&P, right, consists of some of the biggest company in the market, correct? Biggest companies in the market. So if you put two and two together, biggest companies, right, most of them, do they still have very big growth potential behind their business? Because they are really so big, right? So do they have a lot of growth potential? Right, Tanya, continue answering the question, okay? Yeah. Okay. I think you got it. Yeah. Okay. All right. So the SPY, right, is not a growth stock. You shouldn't be paying for growth, right? And based on what I showed you just now, right? Based on what I showed you just now, this looks like a growth. All right. Now, and okay. Now, just another standpoint, because all of you are loyal supporters, I want to help you. All right. Okay. I want to keep you out of trouble. Yeah, okay. Now, how would you say the SPY behaves? Should it be a stock, right, that's always outperforming the average, or right, as an index, it should always be trading near, right, the average point, right? Which one will you say? One, right, always far from average, or two, right, an average point of how it should move, right? Which one seems to make more sense, right? One or two? Everybody, type your answers in chat box. All right, good. Thank you very much. Two. Yeah, okay. And if you look at it right now, yeah, if you look at it right now, yeah, okay, and you can see a problem, right? So what I have on the screen is a 50-month, right? I believe that, no, I didn't change it. Sorry. That's why I realized it looks a little bit funny. There we go. Right, what I have on the screen right now on the green line is called the 50-month moving average, right? A 50 period. So can you see where and how far it is? Because this is like the 50-month average price of the index over the last 10 years, right? And that's the average movement of how it should escalate, right? Are we anywhere near that, right? Because this is obviously at about what? 337, everybody. That's 3,400 points. And where are we right now? 1,000 points above the average. Yeah, 1,000 points above the average. Does it sound uh, does it sound like a smart investment if you buy it right now? Yeah. Okay. All right now. So that's it. All right. That's all I'm gonna say over here. All right now. So I think we're done with our first session today. All right. So I'm just gonna wrap it up by bringing the portfolio back on your screen. Okay, so we did 4 positions to open our portfolio. Right now, I did number 1, WBA. Right, number 2, GPS, Gap Stores. Right, number 3, VZ, Verizon Wireless. Right, and 4, right, Pfizer. Yeah, okay, Pfizer. So this marks the first trade of our portfolio together on 22nd of April. Right, now what's the goal again? Right, to achieve about $2,000 in monthly cash flow. Right, from a portfolio that's funded with $100,000. Yeah, okay, so today we have exposed about $56,700 of capital. Yeah, all right, and right, we're sitting at about 1.87% return, right, off $100,000. That ain't too bad, right? We're close enough. So let's see what the market is going to give me, right, come next week, right, and we may add some more trades to our portfolio. All right, now, so ladies and gentlemen, thank you. Right, thank you very much for joining me once again. I hope I've added value to your time that you're given to me on a Friday evening. Right, I'm so happy to be back, right, sharing all this with you. Yeah, okay, and right now, I look forward to seeing you live together with me, right, next week again. Yeah, okay, so please, in the meantime, hit the like button, hit the love button on the Facebook live session before you go, right, and right, also hit the share button, right, to help reach out to your friends over Facebook who are investing. Yeah, okay, so today we built a very targeted portfolio, right? Let's look forward to adding onto it come next week, right? Alvin, right? Alvin, how are you? Right now, so real, very simple, right? It's not cheap anymore. Yeah, okay, the reason why I will not get into any trades on real, right, is because, right, commodity prices have moved, right? It's as good as asking you the question, does oil seem like a good investment right now? You're already too late, right? You're late to the party. So when you're late to the party, do you want to chase the party, right? Do you think it's clever, right? So if you kind of see that the answer is no, right, then these kind of investment always comes with a lot of risk on the downside. Right? Hence, I don't like taking this kind of trades. Okay, now, so I hope that's also another good point over here. Right, so with that, thank you very much over here, everybody. I'll see you next week, right, on our next Facebook Live session. Right, bye for now. Right, have a great weekend, everybody.